The automotive landscape in the US might be in for a strong shock. China's leading EV company, BYD, could soon take the American market by storm, as it's considering setting up a manufacturing plant in Mexico to establish an export hub to the US and get around the sky-high American tariffs on Chinese imports. So is it time for Tesla to start looking over its shoulder? In an older video, we talked about how BYD's global EV sales surpassed Tesla's for the first time ever, and now, with its sights set on the US market that Tesla dominated for so long, can BYD snatch the crown there as well? In this video, we're going to walk you through BYD's planned expansion and Tesla's weaknesses that are leading BYD to make that move. We're also going to talk about what Tesla can do to prepare to take on BYD. Finally, we'll talk about the risks facing BYD stock, as well as the company's remarkable growth, so you can pick a side in this upcoming EV war. Welcome back to PSD Markets. You could say that BYD building a plant in Mexico will certainly happen, as the news came from Zhou Zou, the manager of BYD Mexico. He said that the company is eager to build a car manufacturing plant in Mexico because overseas production is essential for expanding global presence and creating a strong international brand, and that's exactly what BYD wants to do. In fact, BYD already opened new facilities in Thailand this year and announced plans in December of last year to build a production base in Hungary within 3 years. But that's not all, as the company is planning to spend $605 million to build a plant in Brazil. BYD has already launched a feasibility study for the Mexican plant and is now negotiating with national and local government officials over a location and other terms for the plant. BYD vehicles have been available in Mexico since early 2023, so building a manufacturing plant in Mexico isn't meant to be BYD's way of entering the Mexican market, but its way of entering the US market. In Q4 of 2023, BYD managed to beat Tesla for the first time ever in terms of global EV sales, as it sold more than 500,000 vehicles, while Tesla sold around 485,000. But BYD's sales are extremely concentrated in China, with exports accounting for only 8% of the 3 million-plus cars BYD sold in 2023. And none of that 8% was to the US, because the American tariffs on Chinese car imports are 25%, an extremely high rate that was set by the US government in the midst of the US-China ongoing trade war, and one that the Biden administration was considering to raise even more very recently. This means that it'd be very expensive for BYD to export to the US directly from China, and the only way it can get into the US market is through local manufacturing. Since the requirements for US tax breaks on EV purchases include assembly of the vehicles in North America, manufacturing in Mexico would mean lower export costs into the US for BYD, as well as lower labor costs. In fact, Mexico's manufacturing labor costs are 20% lower than in China, and it also offers steadier wages, so companies can more easily predict labor costs. Choosing Mexico rather than the US is a very smart and strategic move from BYD, as a series of strikes that hit the auto industry in the US over the past year have increased labor costs, so the wage gap between the US and Mexico is expanding. With this announcement, the clock started ticking for US automakers, and mainly Tesla, which is BYD's main competitor in China and globally. BYD seems to be specifically targeting Tesla, as Zhou Zou didn't mention where exactly in Mexico the company is looking for its new plant, but indicated Nuevo Leon and Bajío were likely candidates. You shouldn't be surprised if Nuevo Leon is picked, since it happens to be the same region where Tesla is building a new car plant. Additionally, the strong competition from BYD in China has led Tesla to start cutting the prices of its vehicles over the past 2 years in the country, and the Chinese company ended up cutting its prices as well to be able to compete. This started harsh price wars in China that greatly impacted the country's EV market, with BYD and Li Auto being the only 2 Chinese companies reporting profits as everyone else lost millions. And now, after making it through the Chinese price wars, BYD is planning on bringing the war to Tesla's home ground. But what is causing BYD to make this move now? Or is it doing this because it spotted a weakness in Tesla? You could say that Tesla repeatedly cutting the prices of its vehicles globally, with the most recent cut being in the US in the second week of February, when the company slashed the prices of its vehicles in the US by $1,000, is by itself a sign of weakening demand. Even though cutting prices helped Tesla sell a record 1.8 million cars in 2023, up nearly 40% from 2022, it resulted in the revenue growing at about half that pace, slowing steeply at the end of the year. In the company's 2023 Q4 earnings call, Tesla also said that sales growth for the new year would be notably lower than in 2023, when deliveries rose 38%, And CEO Elon Musk even said that Chinese rivals will pretty much demolish most other car companies in the world unless trade barriers are put in place. This shows that Tesla is seeing the threat from its Chinese rival very clearly, and now it has around 2 or 3 years, which is the time it could take BYD to build the plant, to come up with defensive measures against BYD entering the US market. So, what can Tesla do to stay on top in the US market? While Tesla is famous for its sleek designs and cutting-edge technology, BYD beats it when it comes to prices. BYD makes low-cost battery EVs and plug-in hybrid vehicles profitably, and it also makes its own batteries, which helps keep costs down. But all the US automakers have or are building battery capacity, which should nullify that advantage, and with that in mind, competitive success will boil down to product. In other words, to maintain market share in the US and to not lose out to BYD's consumer-friendly pricing, Tesla and other American automakers need to produce new lower-priced, attractive electric vehicles. Even though Tesla's products are considered premium products, which justifies their high price tags, the company still recognizes the importance of the affordable EV space and is making its own entry into it soon. In fact, it's currently working on its next vehicle platform, which will be the basis of a battery electric vehicle that might start below $30,000, and that vehicle might be on the roads in 2025. Other automakers in the US are also opting for more affordable EVs. For example, General Motors' 2024 Chevy Equinox EV will be available in the middle of the year, and it starts at $35,000. Meanwhile, Ford is working on what it calls Gen 2 EVs now, and one of them will be a smaller, lower-priced EV. This shift could hurt BYD's potential in the US, but it isn't the only risk facing the Chinese company as it attempts to enter a new market. For starters, the global EV market is expected to slow in 2024, which is what caused Tesla to forecast significantly lower sales, and the case could be the same for other automakers, including BYD. The 2024 slowdown was already seen in January's EV sales, with sales being down 26% from December in 2023, even though they were up 69% from January of last year. There's also the fact that the former US President Donald Trump, who started the trade war with China back in 2018 and is less than enthusiastic about the spread of EVs, could get re-elected in November. But BYD's representatives in Mexico brushed aside these concerns, saying that the adoption of the company's EVs and plug-in hybrids are growing in every market worldwide. That doesn't mean that BYD is completely risk-free, as it's a Chinese company, and that makes it subject to substantial political risks regarding China's strict regulatory landscape. Another thing that's worth thinking about is that BYD coming to the US could force American automakers to stop fighting over market share and start making alliances. And it might be already happening, as General Motors CEO Mary Barra said her company would be willing to partner up with other automakers on technologies that are not consumer-facing and form partnerships that would allow the companies to be more efficient with R&D as well as capital. She said that at the Wolfe Research Global Auto and Auto Tech Conference, in which the CEO of Ford, Jim Farley, also spoke and said that Ford would be willing to enter partnerships with other automakers in order to compete with the Chinese company, noting that if American automakers couldn't compete with China, then 20% to 30% of their revenues would be at risk. With all of this in mind, should investors get behind BYD stock, or are the risks just too many? In our previous video about this company, we talked about how great BYD is as a company, so you can watch that to understand why we think so. For this video, let's talk about BYD's performance in the full year of 2023. The Chinese company had a very impressive 2023 despite the price cuts, selling 3 million cars, its most ever, which is a whopping 62% increase from the previous year, and it's forecasting sales in 2024 to rise to 11.5 million. Comparatively, Tesla sold 1.81 million cars, which is a 38% increase from the previous year, and it's expecting sales to decrease. This strong growth doesn't take away the risk, but it could make BYD stock a good stock to own, especially since entering the US market eventually could be a big catalyst. BYD is also China's leading car company, and China's EV market is the largest in the world, so even if it doesn't turn out well for the company in the US, it still dominates China, which might make BYD stock a good pick for investors who don't mind some risk. Well, that is everything for now. What do you think? Is BYD stock a good investment right now? Please let us know what you think in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.